بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين رب اشرح لي صدري ويسر لي أمري السلام عليكم ورحمة الله تعالى وبركاته. Welcome all and everybody in the Zoom meeting and on the Facebook Live. Alhamdulillah, we are here today for this timing session for the digital platforms during the COVID-19 and their impact on the SMEs. We have a high respectful speakers with us today. We have here Tunku Dani, Nasaifuddin, Mudzaffar.
Tunku, not Tunku, Tunku.
Tunku, okay. Tunku Dani, founder and CEO of microLEAP, one of the P2P operators in Malaysia. And we have Wong Kah Meng, the co-founder and CEO of Funding Society, the leading P2P in Malaysia. And we have also brother Umar Munshi, founder and the group managing director of the Ethis equity crowdfunding in Malaysia and Southeast Asia. Thank you very much for being with us today, Tunku Dani, Mr. Wong, and brother Umar.
Pleasure to be here.
Yep, my pleasure as well. Thank you, Doctor.
Thank you, Doctor.
So directly going to the topic today, actually, while COVID-19 have struck heavily on the economy in general, and specifically on the SMEs. SMEs have been finding it difficult to continue their job in the new normal of being in the COVID-19, being in the lockdown period, or even after the lockdown period, in the recovery period. Still, this is a very challenging for the SMEs, and actually they have been hitting from different angles. Their supply chain have been disrupted. Their costs have been higher. There is no revenue or less revenue because of the less of sales and operations. At the same time, they still need to pay for the salaries of their employees, for the fixed costs they have. So as a digital platform that you are providing for financing for USME, and I would say that I'm proud to see in Malaysia we have more than almost like 2,000 MSMEs that they get funding through the P2P and equity crowdfunding. This is the latest statistics from Bursa Malaysia. So while we have like more than 2,000 SMEs getting funding from you, how you see this impact of the COVID-19 affecting their business so far? What are the pain points that they are suffering from, and how it affects their behavior as your customers? So we have here Mr. Meng. Actually, you are one of the leading P2P in Malaysia, and I believe you face these issues with your customers on a daily basis. So could you please give us a background on their pain point within the COVID-19 and how it affects their businesses?
Yeah. So thanks a lot, Doctor, for the context. I think Malaysia, like many other countries, have gone on and implemented a control movement order, whereby a lot of the businesses are unable to operate. Apart from those within very specific list of industries, usually termed essential industries, right? So, but for the majority of SMEs that we have served, typically in, say, the wholesale and retail trading space, say in manufacturing, say in construction, most of them would be in the industries that are non-essential. And as a result of the regulations, they are not allowed to operate, but at the same time, they still have expenses that to pay. So whilst they have been able to sort of staff off payments to, say, their suppliers, given that there are no transactions, But in terms of the sort of day-to-day operations, for example, salary payments, utility bills and whatnot, those things are still part and parcel of what they have to make payments for. And I think that's where they see a lot of pain. And you see that's why you see a lot of companies offering things like unpaid leave, retrenching workers and whatnot. So that's what we generally see in terms of the kind of customers that we have served since 3 to 4 years that we've been around. I think from our side as a platform, we have an obligation, or we have a responsibility to help both the SMEs that are impacted as well as investors that are investing into these SMEs. And what we have done there is basically we have offered deferment programs to SMEs that allow them to defer their financing repayments to a later date, so that when they are able to resume business, right, they're able to sort of restart making the repayments to investors. In the interim, they would have to pay some additional interest to investors as a trade-off, balancing between those two parties. Now that the Malaysian government has relaxed the restrictions, we do see companies coming back in operation. But even then, it is probably something that will take a bit of time to get back to sort of pre-COVID levels, right? I think, for example, generally, if you look at things like F&B and retail, during the sort of CMCO period, you notice that some of the transaction volumes has fallen as much as, say, 70-80%, right, in terms of their sales. Hopefully, with the relaxation of the CMCO, the conditional movement control order, that can actually improve. And from that, we are able to sort of go in and serve SMEs once again.
That's quite interesting. So moving to Tunku Dani, I mean, for your case is or your company is quite an interesting, that you have both Islamic and conventional at the same time. What are other initiatives that as Islamic and conventional P2P you offer for your customers within the COVID-19?
Yeah, I think everyone has been affected severely by COVID-19. As Kah Meng said, a lot of food and beverages company, they have seen, volumes falling by 80%. And even if they do go online using Grab or Food Panda, Grab will still take 30% of their take, which is completely unfair. I know a few F&B outlets that, are telling me that, they've gone digital, everyone's pushing for digital, but when they go on Grab, the Grab won't budge on that 30% take they take on each order. So they've kind of been hit on both sides in terms of trying to generate enough revenue to survive. But for us on our platform, what we've done is we don't offer a moratorium as a lot of banks do. The moratorium, because we are under SC did not tell all the P2P operators to give a moratorium. For example, the banks gave a 6-month moratorium, but it's up to us as an operator to give a moratorium or not. And for us, what we allowed our issuers or borrowers to do is actually restructure their financing. So for example, instead of a 12-month tenor, they can extend it for another year to make it 24 months. Now, in this case, it's best for on both parties. Because as a P2P operator, we are a peer-to-peer operator. We have to take care on both sides. One is the investor, which is the lender. And on the other side is the issuer, which is the borrower. So by extending it by extending the tenor, the monthly payments that the issuer has to pay is less per month, which makes it more sustainable for them. On the investor side, the lenders, by extending the tenor means that at the end of the, say from 1 year goes to 2 years, at the end of the 2-year period, the total profit that they make based on the profit rate, if it's Islamic, and interest rate of the conventional, is more than they would get if it was a 1-year tenor. So that's the best for us on both sides, where everyone is happy. The P2P investors, they're getting more profit at the end of at maturity, and for the issuers, they pay less per month, which helps them in their day-to-day management of their finances.
Okay, that's interesting. So you provide this kind of facility to your customers. Other than that, did you try to come up with a new or like innovative product which is more specific for the COVID-19, or you are waiting until the situation is better or more clear to go through it?
Well, for us, we have to really look at the kind of businesses that will do well during COVID-19. The businesses that have done well, generating revenue, are those that are selling online, because they don't need to have a physical presence, a physical outlet. You know, they can sell through Lazada or Shopee. So, for example, during COVID, we actually finance. We're into microfinancing. So, a small he sells halal confectionery on Lazada and Shopee. So he needed a small 6,000 ringgit Sharia compliant financing during COVID. And because that he sold online and was doing well during COVID, we were happy to have him hosted on our platform. So these kind of businesses that will do well is what we're trying to find and put on our platform. Because the last thing we want to do, of course, we want to help everyone as much as possible. But during COVID, you know, everyone's been struck. Making revenue is difficult, and a lot of issuers actually come to us and say, "Look, I'm not making any business, I'm not making any money, but I need financing." So they get desperate, but they're open and they tell us this is happening. So we have to really look at it and really go right into their credit history. Do they look at their balance sheet? Do they have enough funds to last, you know, the 3 to 6 months that they may not be making revenue? So we really have to help the ones that we know that are going to do well. Because at the end of the day, if we get our P2P investors to finance a company that's not going to be in existence in the next 2 months, it's unfair on the P2P investors, the lenders, right? So we have to look and become responsible lenders, shall we say. So we really finance companies that we know have the ability to pay back the debt. Because at the end of the day, it's actually debt financing.
Okay, that's also an interesting input from the P2P. And of course, for as the audience are aware, the main business of P2P is it's a debt financing, kind of a debt financing. However, the SMEs, they have another platform to go, which is through the equity crowdfunding. And here I ask Brother Umar. Brother Umar, of course, he is the founder of Ethis crowdfunding. They have the experience in Southeast Asia, and recently in Malaysia, they have the license for the equity crowdfunding. So equity crowdfunding is, I think that will be really an interesting case in the COVID, because this is where you see this is the time of the high risk, and the investors in equity crowdfunding in general, they are taking high risk. So how you see equity crowdfunding can help the clients, that especially the SMEs? What kind of alternative solution that SMEs they can get from the equity crowdfunding, Brother Umar?
Sure. Thank you, Dr. Kinan. Assalamualaikum warahmatullahi everyone. Glad to be here along with our two other esteemed panelists. So just before I get to your question, Doctor, if you don't mind, just to add on to what was said earlier, for Ethis, we have P2P crowdfunding in Indonesia, but it's very focused on property. But even for property, and maybe to some extent construction activities, it's also affected by the COVID, right? And our experience there, of course, is very different from Malaysia, but our experience is essentially we try to sit down, talk, and understand the situation that the developers are facing. At the same time, we also keep track of what the government is implementing, so that we know what kind of limitations they face, and then we try and figure out how to make things work. And I guess one key difference that can be present for Islamic financing, of course, depends on the structure. Like for us, we do istisna or musyarakah. So essentially, the tenure or the time duration for the investment is tagged or pegged to the outcome of the project or the activity, right? So it's not strictly based on time. So in this case, so far what we've experienced is that most of our fundraisers or issuers are looking for an extension of time, but they believe they can still perform and they can still continue and complete the project and pay the investors. Yeah, so I guess it's a little bit different in terms of the treatment for Islamic financing and also for direct loans with interest, where the tenure is very much linked to the returns that the investors get. Yeah, so just wanted to share that a little bit, which may be interesting, especially for the Islamic finance students who are probably online. And for Malaysia, to address your question, yeah, I think equity investment or equity fundraising by its very nature, it's a bit of an echo. Yeah, by its very nature is essentially different from financing or debt-based financing, where debt-based financing, there's very fixed or there's known timelines or tenures, right? Where the money has to be repaid with the whatever profit or interest within a certain period of time. Whereas for equity, it tends to be more, the investors are more deeply involved and more participating in the business itself over time. So returns may come as dividends, the returns may come as an exit, but it's not going to come in 3 months or 6 months time unless it's a SPV kind of equity financing. So I believe that equity financing has a very key role to play, especially for businesses, the way we look at it, businesses that were very strong and very viable in the past. And because of the COVID, they had to pause or slow down or downsize or even stop completely. But fundamentally, as soon as the economy starts to go back to whatever normal may be, then they should be able to pick up again. And given their track record of their previous strength, we anticipate that they would be able to hit the ground running and to grow fast. So these are companies that may not want to take on debt, but they may want to take on equity investors, because the equity investors are coming in for the journey as they revive or recover from the COVID issues. Yeah, so maybe I'll pause for now.
Okay, thank you very much. So if I can summarize, the customers or the clients, the SMEs, they have two options through the P2P and through the ECF. They can get the debt financing, they can get the equity financing. And however, if I can like ask Mr. Wong, now if we talk about like how the economics have been impacted by the COVID, which have been hardly impacted. Now you have a big base of the clients, and of course, as you mentioned, they are also affected by the COVID-19. Now, so to what extent that you can see this affecting their businesses and their payment behavior? Like, can you say, for example, it affects like 20% of the clients, 50 or 80% of the clients on their payment behaviors toward you?
So for the lockdown or the restrictions in terms of business activities has been very wide-ranging. So it effectively has impacted almost all SMEs, right? Only a handful of industries that were not impacted. So as a result, when it comes to ability to make repayments, so revenue streams and cash flows would be quite severely impacted. So you're talking really about no business for 1 to 2 months when it was a complete lockdown, and then follow on with a lot of restrictions when it comes to, say, the number of clients you can have and whatnot on the premises. So all those things would have an impact, which is quite significant on the cash flow and hence the ability to pay. So we actually noticed that a big proportion of our SME clients are actually impacted. And what we did there was what I was sharing earlier in terms of providing the deferment program with them, to them, and be able to sort of manage that deferment program, getting them through the process and approved within a very short period of time. So that's what we're trying to do to reduce the anxiety on the SME clients that we have. We do foresee that this situation might persist for the next couple of months as they try to regain the business momentum that they have. So for example, if you talk about a retail sort of B2C sort of SME, so they sell to retail customers, individuals, that would ultimately depend on, let's say, the consumer confidence in terms of are they willing to spend as much in this new world as compared to pre-COVID. knowing that there is concerns around job security, there's concerns around the pay cuts that they might face, health costs and what have you. So there's that big component for the B2C SMEs. And that is something that we were to sort of see what happens in the next couple of months in terms of the recovery of the businesses. The other segment of clients that we have, B2B SMEs, so they sell to another business. And typically when you sell to another business, you don't get payment upfront in cash. And that will probably take another 3 to 4 months until the whole trade cycle resumes. So if you, let's say if you start transaction operating again this month or last month, right? You do have to wait 3 to 4 months until the payments are coming from your customers. So then you probably take another 3 to 4 months until you are able to resume the business. In the interim, you would then potentially have to fork out some of your own funds in order to complete the transaction, right? So buy inventory, process them and sell them, ship them and what have you. So I think that's something that will be quite key to look out for B2B segment clients.
Okay, that's great. And you also mentioned about the moratorium. And while, okay, you give the moratorium for the customers, and now some of them, they are picking up, right? And some maybe not. What is the plan for P2P, let's say that after the moratorium, after the 6 months, after October? Because what I believe, like when you give them the moratorium, maybe you are not able to really track their performance, right? Because they are in the moratorium time. But then, do you think that this will affect the businesses after October?
I think once we do not give a moratorium. So moratoriums are usually a very specific term that's used in the banking space. What we do is a deferment program. So it comes with additional interest in the interim, etc. And it's not a blanket automatic moratorium deferment program. So people, SMEs do have to apply for it. We make it as hassle-free as possible in terms of qualifying them. But so this deferment program would help them to give them time to recover the business. So rather than forcing them to make payments, let's say today, when their business might not be operating at optimal level, we're actually giving them time to rebuild the business. And that would actually help in terms of the ability to make the repayments in the near future. So that was the whole intent of the deferment program. Now, having said that, obviously there will still be that risk of a default, whereby, let's say the SMEs are really in a situation whereby they are unable to recover their business pre-COVID. And then that's really a risk that we have to see what happens in terms of the extent and the impact of it.
Okay, thank you. So I may ask a similar question to Tunku Dani. Also, Tunku Dani, you mentioned.
Hello. Dr. Kinan's frozen. Oh dear.
So this could be an opportunity to come in with a plug.
Yes, exactly. Dr. Kinan, are you back?
Okay,
right.
sorry.
Yes.
So,
okay, it's fine.
So it's not just the SMEs they suffer during the COVID-19. Also on online webinars also suffering.
Yeah.
So Tunku Dani, you offer some kind of restructuring,
yeah,
for the clients. But then is it automatically, or you put some kind of I'd say a criteria for the clients? So you don't just like give it and you wait until after restructuring to see if those people are really going to default or not.
Yeah, I think for us, restructuring is on a case-by-case basis. Obviously, during COVID-19, we do try to help our issuers as much as possible. The last thing we want to do is to say that they're in default, make them bankrupt, and go after them. Get lawyered up, get lawyers in, and go after them. That's the last thing we want. It's not good for us, visibility-wise, and also not good for the P2 investors that, as invested the money and lent into these businesses. So the best kind of option that satisfies both parties is of course, restructuring. At the end of the day, it may take longer for the P2P investors to get back their funds, but they will get back the funds ultimately. And because we are extending the tenor, they're actually getting back the funds plus more profit at the end of it. So that's a win for the investors. And as I said before, it's a win for the issuers because they're paying less a month. So this is on a case-by-case basis. If they do want to restructure, they have to come to us, so we can have a online chat to really see their business, see their workflow, see how much cash is going in and going out, get updated financial statements, updated bank statements, and if we think that these guys will do well just after they get over this lull, this slump in business. For example, after 3 months, people start coming back, people start buying things, buying products, using services, so that they can try to get back to pre-COVID levels in 3-6 months. Then yes, we're happy to help in restructure. But the thing we want to do is we want to really make sure that we don't exclude anyone. We want to make sure that the issuers have the ability to pay back their debt at the end of the day. So we do try to restructure as best we can. We never flat out say no, but we do look at on a case-by-case basis.
Okay, that's great. You mentioned the term inclusion, right? Actually, this is one of the main aspects for P2P and crowdfunding. This is the financial inclusion. And this is also what the regulators are trying to push them for it, right? But now I think within the COVID, we have this problem, which is like many of the sectors become, suddenly they become risky sectors. Just for example, tourism, for example. So now bankers, they look at them as kind of high risk sector to give them loans, even if you are SME or even if you are someone who is working within the SME. How you as a P2P like looking for these sectors? Do you, for sure it is high risk, but do you think that this is also opportunities to show the financial inclusion that you can also participate in this?
I think at the end of the day, we all want financial inclusion. We want to give the correct businesses, the correct borrowers, correct issuers, the access to credit that they may not have going through traditional banking means. Everyone says this fact that there is an 80 billion ringgit funding gap in Malaysia, and that is true. But at the end of the day, we don't want to just to give funds for the sake of it. We have to make sure that, especially if you're talking about the tourism sector, okay, very risky. We hear hotels that are being up for sale. Businesses that are going bankrupt, especially tourism and everything associated with tourism, from airlines, hotels, car rentals, etc. So we do want to push financial inclusion. It's something that we want to push, but at the end of the day, we have to be responsible lenders. We have to make sure that the P2P investors, which are from the crowd, who come in and invest in Sharia compliant or conventional means on our platform anyway, they will get back their funds within the expected time frame of 1 year to 3 years that they invest. If a tourism company, a tourism associated company comes to us for financing, we do have to really kind of have a more structured look at their credit, really get to know the business, see if in the next 3 months of getting zero revenue, will they survive? If it's a yes, and they can pay back after 3 months, of no revenue, then we will look to host them on our platform. But if you look at them and we see that, they're going to be bankrupt, they're going to be run out of funds in the next month or two, that'll be completely unfair on our P2P investors to have this kind of credit hosted on our platform. So we have to kind of balance both the investors, which are the lenders, and the borrowers at the same time. So we have a very difficult balancing act as a P2P operator to make sure that both sets of customers are equally taken care of.
Okay, that's good and sufficient. I just want to remind our audience that you can engage with our speakers and post your question within the Zoom chat or within the comments on the Facebook, and we will pass the questions for the speakers in the last 10 minutes of this session. Brother Umar, I would ask you the same question, and I also, which is about the high risk sectors or the high risk client within the COVID-19. And at the same time, I want to open a question for all about, yes, we are talking about those, but I believe at the same time, maybe COVID also show the potential of new customers, maybe new potential customers, new good customers, especially within the e-commerce, maybe. So yeah, so I seek your opinion about these two questions.
Sure. So I think right now the sectors, I mean, it's certain sectors, I guess, is quite obvious, like tourism and travel related, obviously facing problems. Hospitality industry is facing problems. But at the same time, I think maybe the way we look at it is we also try to segmentize or figure out, which SMEs or which types of SMEs and which industries and sectors are impacted in different ways. So there are actually certain industries that have higher demand, and some have maybe slower demand, but we expect demand to pick up very quickly as soon as the economy opens up. And we already see many countries starting to open up right now. Right? Then there are those who can sort of pause and restart again. And there are those that just have to change their entire business model because it's just not going to be possible or suitable for them to continue the way they have. Right? So this, all this information and intelligence is a big challenge, I think, for us because, I mean, for all platforms probably, and also probably all the banks as well, because this is very much unprecedented, right? It's anyone's guess what's going to happen to hotels in 3 years' time. Are they going to be back as they were before? Are they going to be overtaken by Airbnb? Are they going to become more popular than Airbnb because people don't trust going to other people's houses? They want a sanitized hotel. So these are some examples of uncertainty that is now the norm. Uncertainty is now the norm. So as what was mentioned earlier by Tunku, we as platforms need to see how to manage the two sides. And one thing that we have experienced is that what we realize is the larger investors, the more savvy investors, actually do a lot of homework and actually know where they want to put their money. So I just wanted to share one strategy that we've implemented recently is we've started to communicate directly and openly with the frequent and larger investors and understand what they want so that we can try and respond to what they want instead of trying to figure out what investments are good for them. Yeah, so it's still a balancing act. It's not a foolproof approach. And to make sure that the context is proper, just to share with everyone, in Malaysia, we have not started operating. We should be starting our operations in the next 2 months for equity crowdfunding here. So all the examples and all the experience we have is still Indonesia focused. Yeah. So just wanted to make that clear so that it's not confusing. And for Malaysia, the areas that we have identified that we want to go into, firstly, of course, is SMEs that in verticals that we feel are resilient or facing or having high demand, but also very much on agriculture because this issue of food security and the supply of food locally and internationally, it's a big issue right now, and there's a lot of demand and there's a lot of room for disruption at every level. So this is something we are seriously looking at. And in Malaysia, I would say to a large extent, it's very much underserved. Yeah, but I want to bring up one point maybe that probably can get the other two speakers to also add on to, which is that in Islamic finance, we have this concept of a Qard Hasan or zero interest loan or benevolent loan, a loan given for good reasons or purely to help, right? At the same time, there can be certain parameters to charge fees for the service, but not to charge interest or profit on that. So this is a tool or an avenue that I think will be very, very critical because a lot of businesses would probably be able to pay back over time, but for them to share profits and so on may be tough. So I wanted to just put this idea out there to the other two panelists. Assuming you can still charge the fees as a platform, and assuming there is this pool of funds available that wants to go to a social cause instead of charity, they want to lend the money and get the money back, right, without profit. Is that something that both of you think would be doable on your platforms?
Yes, I would say yes, definitely. Sorry, Kah Meng, I'll start first if you don't mind. Definitely, I think this kind of you know, Islamic way of zero interest, but still pay back, you know, pay back the funds ultimately is something that's good. I think it's we've had few discussions with SC before in terms of social enterprise and how we can help those guys. And actually, as long as they pay minimum fee for us to operate as a platform, you know, to cover our costs and to make it pay for the platform, then yes, it's something that, you know, I would very much like to do. Actually, it's something that we've always had in the back of our mind, but obviously hasn't come to fruition yet.
Yeah. Oh no, likewise. I think it's a great idea. I think. Yeah, no, that's a great idea. And I think the key there is basically to make sure that the education of the investors on the platform is managed and done well, so that when they see this sort of investment, quote-unquote investment opportunities, they are aware that the intent of funding this particular SME is of a different nature, whereby it is one of supporting rather than from a returns perspective, so that there's alignment of expectations. But it's certainly a great idea. And I think to that extent, right, and the reason why we are the best platform, and I think it dovetails quite nicely into Dr. Kinan's question around what is our role in financial inclusion. So just to give a statistic from our own platform, and I'm sure it's the same for Umar and Tunku as well, is that the majority of SMEs that come to us for financing, and we do end up approving and dispersing financing to them, the majority of them does not have a bank financing at the point of application or when they came on board as a client to us. So this is really the segments that the banks are not really giving a loan to. And that's where we see ourselves really plugging the gap when it comes to serving the underserved from a financing perspective. So a lot of, for example, specifically from Malaysia, you see a lot of people who are banked. So a lot of them have, the majority of them have bank accounts. But whether they have a bank loan or not, that's a completely different story altogether. And that's what we've done for the past 3 to 4 years that we've been around. And I think so then the question becomes, during this crisis, what is our role, right? And what should we do as a platform provider, knowing that we serve these really underserved or unserved SMEs from the sort of micro, small enterprises that do not have bank financing. And that's where we see that any kind of government support funding coming through and working with us would be able to sort of reach all these SMEs in a much more operationally efficient manner compared to what traditional financial institutions might be able to do, given that the fact that we operate purely online and we work through the banking system to channel the funds to these SMEs, right? So I think that's where the angle that we see in terms of us coming in and stepping in to provide the financial inclusion component. So matching the SMEs with the right type of funding or support. I think what you also correctly pointed out is then business models have been evolving given the COVID situation. So most noticeably is offline to online and sort of utilizing the different services out there that enables this to happen, right? So it's not purely setting up a website, but it's about how do you sort of figure out your logistics, right? So let's say if you were retail, how do you get your goods and services to your end consumer? So those things, the good news is that that has been brewing since pre-COVID. So all these services and solutions are out there. It just sort of hastened the pace in terms of SMEs wanting to adopt those services. And oftentimes in this current period, you'll see the price perhaps with a few exceptions, would actually come down because the service providers would have an incentive to keep the customers for the long term, and you want them to survive through this COVID situation, right? So it's an opportunity for them to acquire customers over the long term. And for us as a platform, as a digital financing provider, is that how do we sort of innovate our underwriting approaches to be able to access these new business models. So you can no longer ask them things like, oh, show me your utility bills for the last couple of months, or do you have a place of business operations? That probably is no longer too relevant. And we have sort of evolved the way that we underwrite and the way that we reach out to SMEs in this new sort of business environment.
Okay,
Dr. Kinan, if you don't mind, I can add on.
Yes, please.
Sure. So just quickly, I think the key, when you talk about inclusivity for platforms, the key advantage we have is being nimble and being fast, in the sense that we can take on different types of projects, different types of funding opportunities that banks may find difficult. Just a very quick example. In Indonesia, I mean, my examples are all Indonesia. I don't have any Malaysian examples yet. But in Indonesia, a very good project came to us because the banks were about to fund the completion of a new school building for a madrasah or Islamic school. And the collateral is in that the bank was wanted had to be in Jakarta because the HQ is in Jakarta, whereas this is in West Java. So as soon as the bank was about to give the disbursement, the government implemented lockdown in Jakarta, and so they could not get the collateral in Jakarta. So this school was then stuck because the new students are coming in and they already have the funds, but they cannot get the funds. So they came to us and they said, we have other collateral in our region in West Java. Can you take that collateral? The bank can't because the bank's branch is in Jakarta, right? So we looked at the deal. It's a very good deal, and we said, sure, we'll take the collateral where you are and fund you. And later on, when the bank comes in, then we can work on the arrangement for the exit. So this kind of opportunities, there's I think going to be more and more opportunities, whether it's in Indonesia or Malaysia, because as the environment changes, banks are very restricted or limited to what they do and how they do it. And they are trying to change, I know, but probably it'll take some time. So that's where there's an advantage for platforms. And secondly, going online, when businesses go online, potentially there's a lot more data that can be accessed, right? And platforms are built to be digital in the way that we thrive on or we live on data. So if we can gain access to this kind of data, then there's a very much higher likelihood of being able to fund these businesses as compared to them going to traditional lenders. Yeah, and I think that's what I wanted to add for that. Thank you. Okay,
that's good, and that led me to question, since you are talking about using the data and utilizing the data. And this question is always about the competition and collaboration between digital platforms and the financial institutions. And actually not just the financial institutions, also I would say the e-commerce, because financial institutions, they have a big amount of data. Same thing, it goes also for the e-commerce. They have a big amount of data, which can help the digital platform to analyze their customers and give them a better offer. So this question is open for all. How do you see that this kind of collaboration can enhance your business? I believe some of you already start to build this kind of collaboration. But how you see that this kind of collaboration can help you to provide, I would say, a better and more preferable services and products for your clients? Maybe Mr. Wong can start.
Yeah, so I think given the current situation, so we have always had a lot of partnerships with bank and non-bank financial institutions. So for example, we work with e-commerce platforms and what have you, B2B and B2C marketplaces. And what we do there is basically work with them to understand their customer base, understand where the financing need is, and how we can come in as a financing solutions provider, and being able to sort of tailor the financing proposition based on the needs of the customers operating in that ecosystem or on that platform, and be able to sort of provide a solution that matches that operational flow. So that's one of the things that we have been continuously doing since even before the COVID days, and it's only been more of a spotlight for us in recent months, given the whole current situation.
Okay, Tunku Dani, you.
Yeah, I think partnerships is the way forward for many of fintech companies, especially if there's a partnership between a fintech company and a bank, for example. Banks traditionally are very slow to move. They use a very kind of branch kind of plan of how they work. So how they reach out to customers is by building more branches, which is expensive and gives you lots of overheads. While fintech companies, we're only limited by smartphone penetration and internet penetration. So if there's more partnerships between fintech companies and banks, that'd be great. We are in a few discussions here and there to see how we can work together with some banks, especially when it comes to financial inclusion. These kind of partnerships are great. And there's also other partnerships, for example, public-private partnerships, public being the government and private being us. We partnered with MDEC to kind of show and raise digital financial services awareness to the B40, who we are trying to help. So together in partnership with MDEC, we will soon be going around up and down the country to tell all these micro enterprises, these kind of B40 businesses, that there are other alternative avenues of raising funds. You don't have to go to bank all the time. Of course, the alternative financing space in Malaysia is very small compared to the more developed countries. For example, in UK and US, alternative financing makes up about 20% of total financing involved, while in Malaysia it's only about 3%. So there is a gap of how much we can grow, but I think we have to let people know that through these partnerships that there is an alternative financing available for them.
Okay, good. Thank you very much. Okay, I can see the angel investors behind you, so it's okay. Turn to questions from the audience. We have a question from Arif Ahmad, and I think this question is for Brother Umar. The question is about comparing Islamic to conventional finance during the current COVID-19. What kind of solutions that Islamic finance, I would say, what kind of unique solutions that Islamic finance can provide? And here, of course, we are talking about the digital platforms.
Right, thank you for the question. I think this alludes a little bit to one of the examples that I brought up earlier, which is the Card Hasan example. I mean, it's a big question, but one way maybe I can answer is I believe and I feel strongly that Islamic finance should always have a combination of commercial financing and social financing, because that is the complete system for Islamic finance. So you have social finance, for example, you have wakaf or endowment, you have zakat, a form of tax on wealth, and of course general charity. So I believe that if the two sides are brought together, are merged, or at least a feeding of each other, then there can be a lot of benefit for the commercial side as well. Okay, as an example, let's say we do a Card Hasan project. Let's say microLEAP, since they're focused on microfinance, and now we bring in social finance. So we bring in charitable funds, and these charitable funds provide some kind of hedging on or some kind of coverage on the potential loss, right? Because it's pure charity, it's not going to come back. So a portion of charitable funds goes to this Card Hasan program, and then a portion is people who cannot or who do not want to lose their money, basically, right? But the charitable part, the nature of it is to give it away. If it comes back, it's a bonus. You can keep lending it. It's a Card Hasan, revolving it round and round. But if it doesn't come back, then it's fine because it was charitable in the first place. So then we can mix the two sides: those who have an interest to get their money back, and those who have no interest to get their money back. Now, we can then expand it to another step, which is those who want to look for returns, right? So, for example, again in Indonesia, we have wakaf Waqaf hospitals, and this is a very big trend. So Waqaf is endowment, for those who are not familiar. It's a I guess, Islamic endowment, or rather the concept of endowment was derived from the concept of Waqaf a long, long time ago. But anyway, so Waqaf hospital, certain aspects of it are pure charitable or altruistic, and certain aspects of it are commercial. And that makes the commercial viability stronger, and at the same time allows the hospital to serve those who cannot afford to pay, because that is from the Waqaf component. So this is one angle that I want to put forward, that social finance, which includes Qard Hasan, and commercial finance should be brought together in Islamic finance so that there's synergy, and both sides will then benefit. Charity becomes smarter and more sustainable. The commercial finance becomes potentially more viable.
Okay, I think this is a really interesting proposition. We have another question from Kate. Kate is asking, saying that BNM provide lots of financial relief to help SMEs in combating COVID-19. One of them is the Special Relief Facility, which offer financing at 3.5 annum. How digital platforms, or what is the competitive advantage or each of digital platforms in this case? Can you offer better, I would say, better price for the clients, or better services for them? Mr. Wong and Tunku Dani.
Cool. Yeah. No, I think thanks for the question. You're correct. So for us, we don't see SRF as a competition, right? Because at the end of the day, what we're trying to do here is trying to provide the financing to SMEs that are being negatively impacted by the current situation, easing their cash flow so they can make salary payments and whatnot, in order to, one is to sustain the business, and secondly is to maintain jobs. And thirdly is basically to ensure that the infrastructure of the economy is intact, right? So businesses are still intact, the capabilities and expertise are still intact once we come out from this COVID situation. So that's the whole intent of the whole SRF special relief funding. I think what we can do is basically, it would be great if we could have been part of the program in terms of helping to channel those funds, knowing that the majority of the clients that we serve do not have a bank financing with the traditional financial institutions, which is a challenge. If, for example, if you're a bank and you are unable to sort of get the necessary documentation, what have you, because the way that the banks operate are mostly offline. So even if you have the financing from, say, SRF and what have you, you are not necessarily able to sort of channel it efficiently towards the SMEs, and specifically for micro and small SMEs that do not have an existing relationship with the bank. So I think that's where we could have come in and complement that a bit further.
Yeah, I think I want to add to what Kah Meng said. So it would have been great if we were involved in that, was it 3 billion financing? Now, even though they are offering 3.5%, you have to understand that the banks still have a more stringent credit criteria than, say, many of the P2P operators. That's the whole point, that P2P operators that the SC started this alternative financing space, because ultimately there is a funding gap. So the banks will still use their very stringent criteria. For example, they probably have, need to be at least in existence for 3 years. You have to show the revenue going at a certain percentage going upwards for 3 years. The banks may ask for collateral, things like that. P2P operators do not ask for that. We a very simple process and very online process. So if we were involved in it, then we would have been, at least, it would have been great for us to access areas that the banks couldn't access. So we don't directly compete with the banks. We always kind of cover the space that the banks cannot get to. And that's why we'll always be under the alternative financing space. And that's how we help to, in the financial inclusion part the SC is trying to push forward.
Okay, that's great. And we have a question from Safwan, which is, I would say, this is related to this question as well. So he's asking, beside of providing financing, do you help your clients to get facility, for example, to buy property or something like this? And I believe the question is coming from the idea that when he is as a client of the bank, so the relationship is not just for the business, it's also for his personal financing, for his own, for the consumptions, right? So somehow there is like, I would say, big relationship between the client and the bank. Now, when we talk about the digital finance, the digital platforms, P2P and ECF, mainly, at least for now, mainly they are for businesses. So do you think that this relationship, your relationship is only for business with the customers? Do you think that this prevent some customers and like maybe push them for the banks because they also can have other facilities from the bank for their personal financing? And I think this question is also more relevant in the COVID-19, because in the COVID-19, you are mixing now between your business and your personal, especially for the, I'm talking about the SMEs. Mr. Umar?
Okay, so yeah, in Malaysia, Securities Commission does not allow platforms to do consumer finance or personal finance. In Indonesia, actually, it's allowed. The license, the approval that we have in Indonesia, we can do consumer or business, but in Malaysia, it's not allowed. So your question on whether customers, sorry, my daughter is getting excited. Yeah, so the question of whether individuals will go for banks because banks have both compared to platforms because we only have one. I don't think it's a big challenge or issue because it's so easy nowadays to so-called shop around, especially since we are online. So the way I see customer behavior today is that sometimes, yes, there is an affinity or loyalty to a certain brand, but it's mainly about the actual service and the features that they're looking for. And they can, get the service from 3-4 different providers because they have different criteria and or different features that they like. So I don't think this is an issue. Personally, I feel it's better for platforms to focus on business financing because it's, in a sense, usually much more productive and let the banks continue to learn.
Actually, the speech is very interesting. However, we approach 5 o'clock, so maybe we can wrap up the session. I will give maybe 1 minute for each of the panelists if you want to give any advice for the SME in this time. Tunku, Danny, you can.
Yep, I think COVID-19 has been unprecedented. Never has it been where people are stopped from going out and consuming. People are stopped from buying. People are stopped to travel. That's never really happened before. So for me, I mean, my hope is that we get a V-shaped recovery, because once people are allowed to go back out, people are allowed to go and buy things, people are allowed to stay at hotels. Right now during RMCO, we're allowed to have domestic tourism. So this kind of coming back to normality is key for me. And my wish is that it is a V-shaped recovery rather than a U-shaped recovery. Because at the moment, people want to buy stuff. People want to get a job. People want to start earning money and spend, So there's all this pent-up frustration. I think that Malaysia and hopefully the global economy will reach back quickly to the heights that there were before COVID. That's my wish anyway.
Thank you. Mr. Wong?
Yeah. No, I think thanks everyone for organizing the session, but maybe using these opportunities to sort of paint the silver lining, right? So I think in terms of the lockdown situation, fingers crossed that the worst is over. I think we had a almost full lockdown a couple of months back, and it's been lifted progressively and more so into the future. So I think fingers crossed that the situation stabilizes and we can get back to normalcy. I think for SMEs, it is a great opportunity to really look at your end-to-end value chain and identify where your vulnerabilities are. So for example, from a supplier perspective, from a customer acquisition perspective, and to have a backup plan for all these things, right? And I think secondly is basically being able to sort of explore the sort of different solutions, software solutions and whatnot, to help your business navigate this in this new normal. I think in this current environment, things get cheaper. So it's good to sort of innovate now, and there's more reason to do it now. So times are definitely not great, but I do see it as an opportunity now that the worst is over. Fingers crossed.
Okay, thank you. Brother Umar?
Sure. So my advice to those who are seeking to raise funds or need some funds to grow their business or continue the business, the money investors still want and need to move their money. And in fact, I believe that there's still a lot of interest from investors, whether it's at the retail level or larger investors. So the challenge is that everybody is going to be pickier, more selective, more careful, more risk averse. So it'll be tough to try and raise funds when your situation is still bad. At the very least, if you have some steps that show progress or that show a trend towards becoming profitable or revenue growing again, as long as you show some strong indication that you are back on track, then I think there's a much higher chance to get financing, especially from platforms. For the banks, I'm not sure. I do know that in many countries right now, the banks are being flushed with money to revive the economy, and so that may have an impact, but I'm not too sure about that. So when it comes to platforms, basically you need to be very, very you need to show that your business is back on track, because if not, investors are going to shy away. They fear that you may not survive or you may not make it, and so they're not going to put the money there. So yep, that's what I have to share.
Thank you very much. And I would like also to thank our audience. Actually, we have couple of questions. For the short time, we will not be able to answer it in this session. I would like to thank our panelists, Tunku, Brother Umar, and Brother Wong. Thank you very much for being with us today and sharing your experience. And at the end of this session, I would like also to invite all of you for our next session in 25th of June, which also will be focusing on the SMEs. And again, we are focusing on the SMEs because this is the bone of. We believe that this is the bone of the economies, and if we want to survive and stand up again, so this should be through the SMEs. Thank you very much again, everyone, and hope to meet you again. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Thank you.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
Thank you.
Assalamu alaikum. Thank you.
Alaikum assalam wa barakatuh.
Thank you. Assalamu alaikum.
Assalam.
Assalamualaikum. Bye, Kinan.